Hi folks, Jeremy Tyler coming to you today, not from the Hammons Tower. It's September 3rd, so it's going to be 3 days prior to you receiving this. And in today's video, we're going to go over just a couple of key levels that we're noticing on the S&P 500 as well as the NASDAQ. We'll dive a little more granular, talk about NVIDIA earnings and how that went, and maybe bring some other topics to your attention. So in our first chart or quote graph today, we're going to revisit the Cape-Shiller price to earnings ratio. In this chart, if you'll recall, it's just a simple metric that lets us know if the S&P 500, which is the market, 500 different stocks thrown into the S&P 500, is expensive or not. We've noted some high levels here on this chart. So the highest peak back there before the 2000 meltdown was 42.19, and you'll see that that was quickly followed by a gray/blue bar, depends on how it's coming through to you. Those bars represent recession. The next time that we had the great financial crisis in 2008, that peak there was 27.5. followed by a low of 15. Really all we're worried about is the data over to the right hand side. If you'll notice, we've drawn a line here to show the value of 30. Of recent times, when the Shiller-Cape ratio has been over 30, it has been a 100% indicator for recession. We have several different indicators like that flashing right now, so we remain bearish, and this is one of those reasons. Okay, so in our first technical chart, let's take a look at the S&P 500 represented by our chart SPY, ticker symbol. So when you look at this chart, what we're going to do is not actually pay attention to, quote, moving averages, which is the squiggly lines. We're going to take a look at what we would call pivot points or key levels. I have illustrated the common ones or the most near to us in yellow highlighter here. We are sitting today on a key level of 556. And this is Tuesday, again, September 3rd. The market's going below that level. I think that we may lose the 556 level today. The thesis behind these support levels is, if you'll notice, when I draw a yellow line, easier to notice, say here at the 549 level, which is 1.2% below where we're at today, you'll see there's several of these candles that touch that line. That tells you that it's a key level for us either to hold if the market is going down, or for it to break through if the market is going up. Right now we've got a few of them kind of stacked together here because we are near all-time highs. These levels of 549 followed by 537. The 537 seems to make a little more sense because that was before we had kind of, quote, this breakout in the market euphoria type of situation. I would expect us to gravitate towards that 537 level over the next week or two. If you recall, September is the most bearish month out there. Not good for stocks typically. If we find ourselves in a solid market downtrend, we could then visit this 520 level. And that, of course, is going to be significantly lower than where we're at. And we, of course, do think that that's a possibility. Lastly, over the course of the next 3, 6, 12 months, if the market does enter recession, I would expect us to be looking to this 460 level, which is 17% below where we're at today. And if you're wondering if that's possible, that's very possible. We've seen days not days, but weeks where that was achieved in a short amount of time. So we will remain prepared for bearish activity. Okay, in our next chart, let's take a look at the semiconductor ETF, SOXX. We have been short the semiconductors and NVIDIA for a little while, probably too early to the game, but we have been rewarded recently. And today, very specifically, things are going well for shorting semiconductors. But let's take a look at the SOX ETF and the key levels there. So what's represented in this graph, if you'll notice, the first key level is 235. That's an upward resistance. So every time the green or red candles get towards that 235 level, we expect it to, quote, bounce its head off of that number several times before ever going through, if it does get through. At this price where they are so expensive, we really didn't expect it to get through. Now you'll look, The level we discussed last time, I showed you down below, where the SOX was testing the 200-day moving average, which is your red line here. We actually didn't even think it would get through that level, but they did push it up a few percent. Then we added to our short back here in this boxed area. So there's a purplish highlighted box. You'll see that the price traded within that box, except for one time it broke out to the top, but quickly came back in the box. Now we have clearly broken that box trend and fell below. 20-day moving average is the blue line, and we are going to be really close to the red 200-day moving average. I have put a bear here just so that you'll know every time we use those. If this price line goes through that red line, we are going to be looking good. That means semiconductors are absolutely falling apart. The AI story is over, and it was a dot-com bust just like the other. So I'm going to put up a graphic on this next screen of NVIDIA's earnings. This has been all of the hype of the world for the last year and a half, and let's just take a look at a couple of figures that make the valuations hard to believe any longer. So in this graph, you'll notice really the column that we're interested in the most is just the total revenue down at the bottom. And if you go back to, say, Q2 of fiscal year 24, which is the fourth one from the right, that was the initial revenue that these guys started out with, $13 billion of revenue. They added $4.5 billion when they got to 18. Then you'll see the trend. They had $4 billion every quarter. Miraculously right on the dot of $4 billion. Now they have guided to add another $4 billion for this next quarter, but the reality is their profit margins, without getting into a lot of detail here, their profit margins are starting to come down from roughly 77% to now 75%. Demand is waning as you get competitors like Baidu and the Chinese counterfeit places. Even within America, you've got Intel, who the government is desperately trying to subsidize to be a player in the semiconductor sector, but have been a gross failure for many, many years. So, anyways, a lot of this stuff condensed to say, when we look at NVIDIA's chart and see how the earnings now have translated into its actual chart, it really has put it on a downward trajectory. In this next graphic, we're going to look at the NVIDIA chart itself. So in this one, we will look at the actual NVIDIA chart. I, again, have illustrated some key levels for us to pay attention to. This is September 3rd, and we happen to be sitting on the 109 price level right now. That's a key level for this stock. NVIDIA's broke below that one time before. You'll see where there's a V, but it is sitting right there, and we really expect it to actually go down and test the next level, which is $96. And of course, that's about 15% below the price we're at now. If you get down to $96, I would say at that point you're going to be touching the 200-day moving average, which is the red line. I would expect it to fall there too. Similar looking chart. All of these charts look the same, as in double tops. If I could take a tangent here, you recall we had the yen carry trade roughly 3 weeks ago. They fixed all of the problems with the yen carry trade simply by Ueda coming out saying, guess what? We're not going to raise rates because apparently it's going to run all the stock markets, so we were just joking. No rate hikes today. Well, Japan is going to have to raise rates. I think what happened is all the big boys didn't like that it was going to blow up their portfolios, so they came in and they fixed that really quick, band-aided, and now the yen carry trade is right back on today, and that's why the stock markets are melting down. These double tops are really fishy, that it went down 12%, right back up 12% in 10 trading sessions. Not normal, so we still remain bearish, and there is some kind of shakeout coming soon. I think NVIDIA is just the beginning because they have not done well since they reported earnings. I think from there, we'll just revisit these charts every couple of weeks. The trajectory is down. September is a downward month, actually the worst performing month there is. We've got a lot of data points coming to us again this week that we'll revisit, but most of you are telling me, hey, all of these technical data points don't mean a lot. Just tell me where you think the market's going. So that's what we did today.